Welcome back to the channel. I am not smiling. The market is not friendly. The possibility of recession is high. It's higher than ever before. Today we're going to be looking at Fedex. If you have been watching the news, there's been a lot of news about Fedex. Why? Fedex reporting its earnings, and it gave earlier warning that it might not be meeting up with the estimate. That alone has sent the stock price down about 20%. FedEx is crashing. FedEx is one of the largest logistic companies operating in the world. They operate between all over the world. They're giving warning that logistics is slow, from Asia to America, America to Middle East to Africa, Africa to Europe, across the globe, that business is slow, meaning that there's a high possibility of the U.S. market, the U.S. economy dipping into recession from early next year. It is not funny. They gave a warning towards their earnings, and the stock is already down 20%. The actual revenue is 23.2 billion, while the estimate by analysts is 23.5 billion. The adjusted EPS is $3.44, while the estimate is $5.10. It loses on the top and the bottom, misses top and bottom. It's not funny. FedEx is huge. It's huge, and when FedEx is reporting such, it means that the likes of UPS, DHL, and the others, they might also go in that direction. It's not funny. Let's have a look at the details of FedEx. Let's see breakdown of the earnings. Then we'll also have a look at their website. For those who don't know what FedEx does, you check their website and see what they actually do. We'll also have a look at the technical chart. You see the price action. If there's anything we can get on the price action, maybe we can get some indication, to what we might be expecting or what might not be on the financial statement for the investor. So let's have a look at the charts and the website. Here is the FedEx website. For those of you who don't know FedEx and you don't know what they do, I doubt if there's anyone out there who doesn't really know it. But then, let's just not just assume. FedEx is a shipping, parcel company, which they do all over the world. Rate and ship, track, locations, tracking ID. You input your tracking ID here, and you can track your consignment. Also, big savings for small business. I mean, you can do it as a personal or individual, or businesses. FedEx is in the same category with the likes of DHL and also the UPS, the likes of others. Drop off, redirect, store hours, service alert, return a package, everything that has to do with, dropping parcels, consignment all over the world. So you can see the website. Now let's move on to the earning report. FedEx report preliminary first quarter financial result and provide update on outlook. September 15, 2022, FedEx Corp today provided a business update and announced the following preliminary unaudited consolidated result for the quarter ended August 31st, 2022. Adjusted measure exclude the items listed below for the applicable fiscal year. Fiscal 2023, fiscal 2022. As reported, adjusted, as reported, adjusted. Revenue 23.2 billion, adjusted 23.2 billion, as reported for fiscal 2022, 22.0 billion, 22.0 billion. Operating income is 1.19 billion, adjusted is 1.23 billion. This year and last year, quarterly consolidated results have been adjusted for impact per diluted share. Fiscal 2023, fiscal 2022, Business optimization cost 0.07 cents. Here is negative. Business realignment cost 0.04 cents, 0.19 cents. TNT Express integration expenses negative 0.08. First quarter results were adversely impacted. Global volume softness that accelerated in the final week of the quarter. FedEx Express results were particularly impacted by macroeconomic weakness in Asia and service challenges in Europe, leading to a revenue shortfall in the segment of approximately 500 million relative to company forecast. FedEx ground revenue was approximately $3 million below company forecast, while the company took immediate and decisive action to adjust its cost base. The impact of cost action lagged volume declines, and operating expenses remained high relative to demand. Please see the table below for preliminary results for each transportation segment. Global volume declined as macroeconomic trends significantly worsened later in the quarter. Both internationally and in the US, we are swiftly addressing these headwinds. But given the speed at which conditions shifted, first quarter results are below our expectations, said Raj Subramaniam, FedEx Corporation President and Chief Executive Officer. While the performance is disappointing, we are aggressively accelerating cost reduction effort and evaluating additional measures to enhance productivity, reduce variable costs, and implement structural cost reduction initiatives. These efforts are aligned with strategy we outlined in June, and I remain confident in achieving our fiscal year 2025 financial target. Cost initiative. The company expects the benefit of cost action to mitigate the effect of reduced demand throughout the remainder of fiscal 2023. These cost action include reduction in flight frequencies and temporarily parking aircraft, volume-related reduction in labor hours and other line haul expenses, consolidation of certain sorts operation to drive productivity, reduction of Sunday operation at a number of FedEx ground locations, cancellation of certain planned network capacity and other projects, deferral of staff hiring, closure of over 90 FedEx office locations, and identification of 5 corporate office facilities to be closed with additional real estate realization planning underway. Now, in reducing cost, or there are ways you can try to increase your revenue. One way you can reduce cost or do acquisition to acquire to or increase your pricing. You cannot increase pricing now with the rate of inflation and the macroeconomics that we may likely be in recession all over the world. So reducing cost, cut cost measure is key. Outlook. As a result of preliminary first quarter financial performance and expectation for a continued volatile operating environment, FedEx is withdrawing its fiscal year 2023 earnings forecast to provided on June 23, 2022. While continuing aggressive cost reduction actions, the company expects business conditions to further weaken in second quarter. For the second quarter of fiscal 2023, FedEx is currently expecting revenue of 23.5 billion to 24 billion, earnings per diluted share of $2.65 or greater, and earnings per diluted shares excluding costs related to business optimization initiative and business realignment activity of $2.75 or greater. Anticipated capital spending for fiscal year 2023 has been revised to 6.3 billion compared to the prior forecast of 6.8 billion. The company reaffirmed its previously announced plan to repurchase 1.5 billion of FedEx common stock in fiscal 2023. The company expects to repurchase 1.0 billion of FedEx common stock during the second quarter. These Forecast assume the company current economic forecast and fuel price expectation. No additional COVID-19 related business restriction, successful completion of the planned stock repurchases during the second quarter, and no additional adverse geopolitical development. FedEx earnings per share forecast is based on current law and related regulations and guidance. FedEx plans to provide additional details on its cost initiative and updated outlook during its upcoming earnings call, scheduled for 5:30 p.m. EDT on September 22nd. Transportation segment performance for the quarter ended August 31. Let's move on to um, technical charts for price action there, but you can have a look in your own time for further information on this. Here is the technical chart, and we're looking at daily chart. I want us to start with weekly chart. On the weekly chart, we have market capitalization 41.84 billion, shares in float 236.5 million, shares outstanding 259.8 million. EPS rating is 87. The P ratio is 10. 5-year P range is 7 to 26. Cash flow is $29.79. The past EPS and the present estimate for 2023 and 2025, 2024 and 2025. Here we have it is trading at $161.02. 52 weeks high is $266.79, and 52 weeks low here is stated as $192.82 82 cents. But obviously this is 161, so this has not updated. Our 52 weeks high, FedEx is trading minus 39.6 of 52 weeks high. Let's have a look at institutional ownership. Funds own 43%, banks 1%. Checklist: Peter Lynch 5 out of 8, Warren Buffett 13 out of 16, Benjamin Graham 9 out of 13. Technicals: it is currently trading below 10 weeks moving average and 40 weeks moving average. The red line is 10 weeks moving average, and the black line is 40 weeks moving average. So it's currently trading below them. But as you can see, it has broken this level of support. This is it. We have lower high, lower low, lower high, lower low, lower high, lower low, lower high. We have lower low, and we have a lower line. This level of resistance has been holding, and we have it down. It broke the level of support. Let's have a look at it on a daily chart. On a daily chart, as you can see, it is trending down, but we have a level of support that was broken here. But what you can see, there's a gap down. Is it? Oh, okay. It is currently, yeah, there's a gap down around here, because I can see that, yeah. So we have it at 161. But then, this is the chart that you can see. Let's see if you can see any engulfing. There's no, there's no significant candle that gives us any information, but then it's trending down. Guys, you have seen the technical chart and you have seen the detail of the earning. FedEx is a huge company. This might just be an opportunity for you to buy the dip, but be careful when in recession. Technically, we're in recession, we're in bear market. The market is not friendly. Don't buy the dip at once if you're going to buy. Otherwise, they keep buying the dip, keep buying the dip, we don't know where the bottom is going to reach. So be careful about it. Do your valuation. Be sure that FedEx is, you need FedEx in your portfolio. Be sure that it is good for your, you need to do diversification if you know what that means. You don't want to have too much of one sector than the other. Balance speak with experts, they can help you. It's not just, buying stocks, different kind of stuff. You need to know the sectors you are investing in. Thank you for watching this channel. We continue to produce content that will support your investment journey. Please do your evaluation. Sorry.